Hello, everyone. This is Kathleen Dorsey from the Northwest Chamber of Commerce here in the beautiful Owings Mills, Maryland area. Every month, we have an educational webinar, and we ask members that are leaders in their field to share their knowledge and experience with us and with you, whether you're watching it the day we're doing this or a year from now. So we are happy to have Stephen Hiegel, sorry, Stephen Hiegel here as our presenter today. He is the Business Development Director of Freedom Federal Credit Union. And he is going to talk about savings and differences between banks and credit unions and all kind of things that probably we really need to know. So, Stephen, so happy to have you here. And I'm just going to hand it over since we have limited time. And go ahead and you can get started.
Kathleen, thanks for having me today. Appreciate it. Looking forward to speaking about Freedom Federal Credit Union and some different types of savings accounts and accounts that we have for both business clients and for customers, for just personal clients as well. So I'll start right from the top. First slide, you have types of savings accounts with Freedom Federal Credit Union.
So Stephen, just real quick, we can't see your screen.
Oh, okay. Let me share here. Sorry. That good?
That is perfect. You are sharing your screen now. Yes.
Okay. So savings account 101. What is a savings account? Savings accounts allow you to deposit and withdraw money while earning interest on your account balance. When selecting a savings account, it's important to research monthly fees, minimum balance requirements, interest rates, transactions limitations, and opening amounts. Okay. There are also specialized accounts. Such accounts as money market accounts, MMAs, which are types of savings accounts that typically offer a higher interest rate than a standard savings or checking account. Research interest rates and minimum balance requirements before opening a money market account. Certificates of deposits, or CDs. They are types of savings accounts that generally pay a higher interest rate than a standard savings account because a financial institution holds your deposit for a fixed period of time, whether it be 7 months, 18 months, 55 months. We offer several different time periods to hold your money. Federally insured credit unions like us federally insured credit unions do not offer CDs. However, they may offer share certificates, which earn dividends instead of interest. Please research fixed deposit periods, interest rates, and minimum balance requirements. Okay. And it's important to remember most credit unions call the money it pays you for keeping your money on deposit at the credit union a dividend. It's important to remember that not all accounts pay dividends or interest. So shop around and compare the types of accounts that are available. Continuation of specialized accounts. There are accounts for minors especially as well, which typically have specific rules. Joint ownership, both a minor and guardian can make deposits and withdrawals from the account. These accounts still provide minors with a banking account option, but the account is still technically jointly owned by the minor and the parent or guardian. Sometimes these accounts are set up so that the minor must receive authorization from their parent or guardian in order to make withdrawals. We also have custodial accounts. With these accounts, the parent or guardian may open an account in the minor's name, but only the parent or guardian may withdraw money from the account. However, all transactions must be made for the minor's benefit, excuse me. Kids or youth savings accounts are bank or credit union accounts available only to customers younger than 21, though they're sometimes capped at age 12 or 18. The best ones pay interest rather than adult accounts as a way to incentivize young savers. How do you select an account type? Consider the following questions. Number 1, who's the account for? Number 2, what will you use it for? Short or long-term savings. 3, do you want to be able to access it at any time, or would you prefer to grow it untouched for a fixed period of time? 4, would your amount of money make the most sense in a typical savings or a money market account, perhaps a certificate of deposit, which is a CD? Okay. There are several features to look for in a savings account, such as interest rate and APY, initial deposit, minimum balance requirements, account fees, rate tiers, accessibility and ease of use, supplemental savings accounts. The types of financial institutions. Not all financial institutions are created equal. Consider these 3 types of financial institutions. Non-banking financial institutions, NBFIs, include money service businesses, MSBs, such as check cashing services, which are businesses that transmit or convert money. Banks are for-profit financial institutions that are federally licensed to receive deposits and issue loans. And of course, credit unions such as Freedom Federal Credit Union are not-for-profit financial institutions that are member-owned and operated. Okay. Another not listed here is financial technology fintech company, and it isn't actually a bank or financial institution. It operates an app and partners with banks to provide users with financial services. Among these services include access to checking and savings accounts and a branded Visa debit card. Institutional similarities. Both banks and credit unions accept cash, checks, and wire transfer deposits. They both provide loans, traveler's checks, foreign currency, and money orders. They both offer many conveniences for customers, including 24-hour online banking, ATMs, and many types of interest-bearing accounts. They also offer insurance for deposits on certain types of accounts up to $250,000 per person. Institutional differences between banks and credit unions. Banks are for-profit businesses that make money from account fees and interest from loans. They may have more convenient locations across the nation, and they're open to all. Anyone is eligible to apply to join a bank. Credit unions, on the other hand, are not-for-profit businesses. They share profits with members, customers. They may require membership in a community or group to be eligible to apply. For example, Freedom Federal Credit Union, as of right now, offers membership to anyone who lives, works, or worships in Baltimore or Harford County. Typically smaller in size, credit unions are with fewer locations, but they may offer better interest and dividend rates with lower account fees. What makes banks and credit unions different from each other is their profit status. Banks are for profit, meaning they are either privately owned or publicly traded, while credit unions are nonprofit institutions. This for-profit versus nonprofit divide is the reason for the difference between the products and services each type of institution offers. A credit union is owned by its members since the institution is actually set up as a cooperative. Credit unions typically open membership to individuals who share a common bond, such as the industry that they are employed in, the community they live in, their faith, or their membership in another organization, which I mentioned. It is the credit union's mission to provide its members with the best terms it can afford for their financial products. This means members generally get lower rates on loans, pay fewer and lower fees, and earn higher APYs on savings products than bank customers do. Banks are focused on making a profit rather than specifically centering on the needs of the account holders. This is one of the reasons you'll often find that banks charge more fees and at a higher rate than credit unions do. Interest rates on lending also tend to be higher at banks, while the APYs on savings products tend to be lower. Beware of insurance. Look for financial institutions of which deposits are insured. The Federal Deposit Insurance Corporation, FDIC, insures deposits at federally insured banks. The National Credit Union Administration, NCUA, insures deposits at federally insured credit unions. Private funds may insure deposits at either financial institution. The FDIC deposits in federally insured banks are insured up to $250,000 per depositor per account for each account category, while the NCUA, the deposits in federally insured credit unions, are insured up to $250,000 per person per account for each account category. Okay. A common concern among credit unions is that they're not insured by the Federal Deposit Insurance Corporation or the FDIC. However, even though credit unions are not subject to FDIC insurance, Congress created the National Credit Union Administration, NCUA, in 1970 to insure deposits in credit union accounts. The FDIC is a government agency that provides deposit insurance for up to $250,000 per depositor per insured bank for each account ownership category. If your bank were to fail or run out of money, the FDIC will pay account holders the money they are due from the accounts in a failed bank. FDIC insurance has been around since 1933 to prevent the kind of bank runs and panic that occurred when banks failed in the 1920s and early 1930s in the Great Depression. Before 1970 and the creation of NCUA, credit union members had no such insurance should their financial institution fold suddenly. Like the FDIC insurance, NCUA insurance guarantees up to $250,000 per share owner per insured credit union for each account ownership category, should the credit union close or go into conservatorship. All federal credit unions and most state credit unions are insured by the NCUA. At the NCUA website, you can see if your credit union is covered, and NCUA insured credit unions always permanently display their insurance status on signages in their branches. Okay. Insurance covered. Which accounts and products are typically covered? Checking accounts or credit union share draft accounts, certificates of deposits, the CDs, which we spoke about earlier, credit union share certificates, and other time deposits. Savings accounts or credit union share accounts, money market accounts, MMAs, cashier's checks, money orders, and other items officially issued by a bank. Insurance, which is not covered. Which accounts and products are typically not covered? Stocks, annuities, bonds, life insurance products, money market funds, municipal securities, mutual funds, safety deposit boxes with their contents, and treasury bills. Give an example. Al has been saving for his daughter's college fund. He has about $200,000 saved and has a goal to save $40,000 over time. Al has been keeping the money at home, but recently he moved his tuition savings into a safety deposit box at a nearby financial institution. What other options could have worked for Al so that his money is protected, but might help him toward his goal? Okay. Al's decision, making the right choice for your money. While banks and credit unions offer a number of the same products and services, they are not the same. For consumers who need nationwide convenience, easy access to mobile banking, and a wide array of different products, a bank may be the better bet. But consumers who need lower rates and fees, higher APYs, a personal touch when it comes to customer service, and access to excellent free financial education may do better with a credit union. The bottom line is choosing a bank or credit union comes down to what you value. Consumers who value technology and access to in-person services may prefer banks, while those who value better rates and customer service may be better suited for credit unions. You will need to consider all the factors to choose the option that aligns with your banking needs. Sorry. Apologize, my screen froze. Who we are. We are not for profit, in the community, and member owned. That's Freedom Federal Credit Union. We have 5 branches in Harford County, 1 in Baltimore County, with several new branches on the way by the end of 2024. We recently announced a merger with Atlantic Financial Federal Credit Union, so we'll have a branch in Hunt Valley and a branch in the Pikesville area by the end of 2024. And Freedom Federal Credit Union's mission is to be a trusted partner by creating a culture of people helping people that meets the needs of our members and the communities that we serve. Banking at Freedom Federal Credit Union. It can get you savings, MMAs and CDs, checking accounts and credit cards, loans and services. To become a member, you can apply in person at any branch. You can contact me directly or apply on our website, freedomfcu.org. And I'd be happy to talk to you, and I can share my contact information as well.
Stephen, wow, I didn't know a lot of that. So thank you so much for sharing all that with us.
You're welcome.
And yeah, and there are a few questions. Many people think that, and if you want to unshare your screen, you can.
Yeah, sure.
Many people think that to be part of a federal credit union or, just a credit union, you have to be either a veteran or work for the state or work for the county or be a teacher or something like that. So I know that you did have in one of your slides that you might need to be part of some sort of a group, but can you expand that a little bit of who's actually eligible to be a member?
Sure. As of right now with Freedom Federal Credit Union, anybody that lives, works, or worships, like their church or, allegiance in either Baltimore or Harford County can become a member of Freedom Federal Credit Union. So, for example, if you live in Columbia, Maryland, but you work in Reisterstown, you can become a member because you work for, a company that's located in our boundary. Another caveat is we work with a lot of both the real estate agencies, the GBBR and Harford County Real Estate Association. So say you live, example would be a woman who came to me who lived in Southern Pennsylvania and her office was in Columbia. But since she was a member of GBBR, the Greater Baltimore Board of Realtors, and we're partnered with them, she could join that way through her GBBR membership. So
if someone's a member of the Northwest Chamber of Commerce, for instance, would they be eligible no matter where they live?
correct. Yes.
Okay, that's great. And I want to bring up a point that you brought up about having an account with your kid, with your child. I had opened one with my daughter when she was 14, and it really did help her learn money management, learn, money doesn't just keep coming. You have to like put it away. And she also learned how great it felt to see the money grow. And to see her savings account grow. So can you expand a little bit more about those type of an account? I know you had 2 types, but what the age limits would be for those, because personally, I saw a great result of having my daughter part of that as early as possible.
Yeah, let me find the slide because Apologize here. So, basically, a joint ownership account, of course, both the minor, like I went over, the minor and the guardian can make deposits and withdrawals from the account. And these accounts provide minors with a bank account option, but the account is technically still joint owned by the minor and their parent or guardian. These accounts are set up so the minor must receive authorization from the parent or guardian to order to make withdrawals. With the custodial account, that's with your daughter, like you had mentioned before. The parent or guardian can open the account, but only you can make withdrawals from the account. But all the transactions must be made for the minor's benefit.
Okay. All
They're
right.
only available for customers younger than 21, of course. Sometimes they're capped at either 12 or 18. And they're great accounts and they can be monitored by the parent or guardian at all times.
Okay. Sorry.
That's
Sorry
okay.
if you're hearing my dog.
That's okay.
We have 20 minutes and of course, he's going to decide to bark.
My dog barks all the time too. He's just having to be downstairs today.
Okay. So, credit unions, again, it is interesting. Can you explain also the dividend part? Like, having an account with a credit union, does that mean I'm actually might make a little money as just being part of you guys?
Yeah, just an example. So we have certain special workplace partner benefits for our workplace partners. So say, I guess an example would be name a business within Northwest Chamber, just off the top of your head, like a company that's with Northwest Chamber, just a business. I'm trying to think. Oh, just I drew a blank.
T Rowe Price.
T Rowe Price. Okay, T Rowe Price is a business. So we set T Rowe Price up as a workplace partner, and they're located in Owings Mills, I believe. Correct? Yes. Okay. So we set them up as a workplace partner. I could go in there and do a presentation. Once we set them up as a workplace partner, everybody that works there can get the workplace partner benefits, which means probably the best benefit we offer is 3% APY on a checking account, as long as I keep a balance between $1 and $10,000. And the only caveat is every month they have to run about 15 point of sale transactions, meaning they have to swipe their card 15 times, which seems like most people do, 50 times a month or more. So by doing that and
Sometimes
keeping,
in a day, Stephen, if
yeah,
you
okay.
follow
So
me
okay,
around
sometimes
long
in a day,
enough.
yeah. But for most people, 15 a month, there's no problem. So if they set an account with us, a checking account, they keep between $1 and $10,000 in the account at all times, which if they go over the $10,000, they're not going to get the 3%. They want to keep, a running balance in there somewhere between $1 and $10,000. It could be $300, constantly each month, or $500 or $5,000. It doesn't matter. Up to $10,000, $1 to $10,000, and 15 point of sale transactions a month, you will get 3% APY on your money. And I can't imagine any banks paying more than a half, if they're even paying that. It's a real small amount in that kind of money. So I think the credit union values clients more as well. If you walk in a bank and you have, I don't know, I'm just going to make an example, $10,000 in your account and you took it out, or, the bank's not really going to care. I don't think, unless you had $1 million in the account. Whereas a credit union, we really value the companies and the consumers, and really value who our customers are, and want them to stay members of the credit union. So,
So looking at it as a business owner, or even a large corporation like T Rowe, this could actually be an added benefit. But
yes, we sell it as an added benefit. So I try to connect with a lot of human resources people, and tell them, hey, for your company, if it's a larger size company, and not huge, if it's 30 people, 50 people, even 100 people, 200 people, we can come in and speak to all their employees about the benefits of the credit union, and like I said, those workplace partner benefits, once they become a workplace partner, everybody gets that works there. They can sign up for an account. We also offer great rates on auto loans. We'll refinance your auto loan. 15 months, 0% interest on credit cards. There's a lot of great benefits they'll get that they wouldn't get by just walking into the credit union and, opening an account with us.
okay. Well, again, I learned even more after your slide presentation. So thanks so much. I
Yeah.
hope everybody out there watching this, that you have learned differences between banks and credit unions, types of accounts that you can open to start saving, and just the different avenues that credit unions have for you. and maybe even your employees to be able to better their financial situation. So,
And I
Steve,
signed up for the crab feast next Tuesday. So if you're listening, hear this, I'll be there. You can ask me any questions.
great. This is 2024, by the way. So don't if this is 2025 that you're looking at this, it's going to be a different day.
Different day.
All right. So thank you, Stephen, for sharing that. I do appreciate that. Jojo, my dog, is very happy with it as well. And
Good.
I appreciate everything. And again, we will have this recorded and you can find it on our YouTube channel at any time. So feel free to share this with anybody in your lives that you would like to make sure they understand finances and savings and what type of an accounts they should have. All right. So Stephen, thanks so much. And we appreciate your time.
You're welcome. Thank you again.